Welcome back to another top-notch video, guys. This week we're going to be talking about the markets and the overall just what happened this past week and go into our allocation. So let's move right into it. First thing I want to talk about is the current rally we had for this past week, the 22nd through the 26th. Of course, on the 22nd we had that government shutdown. We didn't know how long it was going to last or how long it would take, so we did end up putting our allocation. We just did safeguarded a little bit of capital just to see how long it would last. Nobody knows, how long something could last like that. The last one was 21 days. This one happened to be 1 day, or 3 days, but 2 days was a weekend. So, talking about this week for the rally of the markets, they continued again this week. Markets continue to rise. Just on Friday, the Dow Jones or the S Fund did jump 224 points. It's amazing to see that 200 points now is no longer even a 1% gain because it's just the markets are going up so significantly. Some of the returns that we've seen so far this year is we've had, of course, a negative return on AGG or the F fund, positive return on the C fund or IVV, which is 7.5%, S fund 5%, or VXF, and the I fund EFA at 6.5%. So pretty incredible. We're going to be just talking about a few of these different funds and what happened with them this past week. So, guys, one thing to keep in mind with the markets is I'm going to show this little chart, and one of the things is just to be cautious about is when you hit that euphoria stage in the markets. It's great that we're doing so well for the month of January, but it's also we want to be cautious that we might be getting to this euphoria stage of making 7% in a month. I would say we're somewhere. I was definitely optimistic and very excited towards the beginning of January once we hit 4 or 5%, and I was even getting a real thrill off that last percentage. But now we're at the point of euphoria, I feel like, and I don't know how long it can last. It could continue to go up, all markets, or we could start this path of this here, as you can see. I just wanted to show this to you guys, and that's why we safeguarded some of our capital last week. So just be aware of that. As we continue on, the S&P was traded pretty closely in its track, as you can see here. It was moving up once again within its 2 resistance lines, so doing pretty well with the S&P. I don't know how long it can withstand that, but we'll see. We'll find out. We'll look at the charts. The S fund was hitting a little bit of resistance here. I'll show that in the charts. The I fund was up yet again. As you can see here, it's just really taken off since 2018. And with the State of the Union, I would expect maybe to see some resistance with this, since that is this week. We also have a big week for earnings, so just be aware of that. AGG continues to have some downward markets. The Fed does meet this week, so we'll see if that brings up any volatility with the bond market or AGG or our F fund. Let's move on to some of our funds now. As always, we have the life cycle funds, which we only use for safeguarding capital, or the G fund, which we use for very defensive markets or bear markets, but stocks are continuing to do well, so we're not using the G fund. So let's move right into our C fund. Lines to draw on this fund. We'll have to see when it starts to break down, or just watch it as it continues to rise. There is it's just been an incredible rally since the beginning of the year. Once again, we had an outstanding week. I mean, you can't ask for anything more than 2% in a week. You can, but that's pretty awesome. What do our charts say about the C fund? So looking on the weekly perspective for the C fund, we have a lot of positive energy coming up here on our weekly chart. We are just barely moving outside those Bollinger Bands. It did actually for the week, and then it rolled back in. But let's look at our 2-day chart. Now, remember what I said in the beginning of the video about Euphoria stage and just, you know, being so greedy that you want to make more money, but it just ends up losing money. This is a great example, guys. Here we go. Our DO oscillator goes from 4.21 to 4.17 to this week, which was 4.16. So even though we had an up market this week, this is something to be very cautious about, and I would just be cautious about putting your funds in here because we could have a down week that could really hurt that. Now, I predict with the strong weekly chart that this will go back up again. We'll have a 2-day fake out. So we'll see something like, maybe something like this again right here. But this has just been an incredible rally for the C fund. But we'll see. We'll see where it goes. Let's move to our next chart. Just be cautious, like I said, just be cautious if you're putting your money in this fund for this week. Moving over to our S fund, or the ETF VXF, which tracks the S fund. Outside of the Bollinger Bands, ever since mid-month, about the 15th, 14th, we moved outside the Bollinger Bands, and it looks like a nice breakout. We'll see if this breakout line is tested, but for now it seems to be holding pretty well. Another really, really good week for the S fund, VXF, over 1% gain, so that's awesome. Glad to see that. Let's look at it on our charts. VXF for the S fund for this week. On our weekly charts, we still have a beautiful gain going. Good weekly momentum going here. Nothing to be cautious about. Nothing to be afraid about there. On our 2-day chart, we were going down significantly, is why we didn't have money in this fund, and we only had one negative 2-day here, as you can see. The rest has been some significant ups for this market. And we did have some positive energy building with our VXF or S fund, which is a very positive sign. Usually off of basically a fake out, you can get 3 to 6 bars is average for a fake out. Here you had one here, and it was 1, 2, 3, 4, 5. So this would be a good fund, especially since we have one more allocation for the month of January to maybe get a little bit more money out of our markets for the S fund, and I will talk about that later as we move into our allocation change. Moving into our next fund, the I fund EFA ETF. This market is continuing to rally significantly. We pulled our money out right around the 18th or so of this fund, which was right about here, and we did have a little pullback here, but it rebounded. The reason it pulled back here is President Trump was at a summit in Switzerland, said something about the dollar, and it did lose a little cash because of that, but not very much, and rebounded significantly. It had a good week as well, sitting at a 1.5% gain for the week, so pretty significant gain, which is great. But like I said, we just safeguarded some of our capital, and we still made money, but not as much money. But I'm still happy with that decision. Lastly, let's move into bonds. AGG. Alrighty, guys. So with AGG, like always, we were sitting pretty dang low here, and we did have a rebound for a little bit. It rebounded significantly, but then it's just testing this resistance line most likely for the most part. I don't know where this will go, guys. We'll look at it on our charts. AGG, or the F fund. So on our weekly charts, we are down quite a bit. Still down on a weekly chart. Still does not look good. But on our 2-day chart, we did get a rebound, and this second bar did finish. So we went from a negative 617 on our DO to a 558. So something to keep in mind, but nothing to put our money in at this time. I forgot to look at EFA charts, so I'm just going to go back to that. So this is the I fund. The reason we're not putting money in the I fund was because this weekly chart looks good, but we're outside the Bollinger Bands, which is one of our warning signs. Once again, we don't predict stocks here, we just look at probability. So the probability of this coming back to the Bollinger Band is more likely when it's outside of this line. It's like trying to get air, basically, and when you're outside here, it's just there's no way for it to get air. You have to wait for it to come back into these Bollinger Bands. And we'll look at our 2-day chart. as you can see, we have been losing energy ever since with our 2-day chart, but the stock market has not been reacting to this 2-day energy, which is it's kind of rare. Usually when these charts tend to go down, you have the markets react to that, but it's continued to go up. But I would not put funds in EFA because of this gap right here. I just think that's a significant gap, and we will just wait to see what happens. There are better funds like the S fund that we can put our money in at this time, which has a better probability of going up based off of these charts. Alright guys, so that is our review for that last week, the week of the 22nd through the 26th. Pretty good week. Like I said, we gained 1% for the most part of our cash being in the Life Cycle 2030 fund. So 0.5% is not bad, but we're not at that euphoric stage with some of our funds. Like I would say we're at that stage almost with the C fund and maybe with the I fund, but a really good fund that I thought we could do based off of the charts. If you look at this VXF or the S fund, because we had this little rally here, I feel like we're going to do significantly well this week with this fund. We have a lot of earnings coming up and the State of the Union this week, and I think that's just going to fuel this run we have right here for a couple more bars. Even if we look at it on the 4-hour perspective, we are in the negatives just a tiny bit, but I really think that's going to come back this week. Just watch it closely. You can make your allocation changes up to noon tomorrow, so maybe look at the markets like 9 or 10 o'clock tomorrow morning and see what the S fund is doing. But for us, for this week, for Sunday night, we're going to take our money out of the 2030 Life Cycle Fund since we are no longer safeguarding capital. This government shutdown has ended. And we have one more allocation change for the end of January, and we're going to stick it in the S fund. And we're going to leave it there and see what happens. Thank you guys so much for watching. This has been another top-notch video. Please like or subscribe, or shoot me a comment at the bottom of my channel. Have a good night.